This is a unique format that we're doing today. We're very happy to do this. I think there's a trend now of democratization in the world of investing over the last decade. And we've seen this a lot with venture funds coming out with their strategies and really going out and talking to the founders and companies that they're investing in. And family offices is actually another bucket of investors that plays a very big role in this innovation ecosystem. And today we have a special opportunity to speak with some of them. So I'm very happy to start here. We can start with a round of intros, I think. So maybe I'll start off with our family offices in Asia. Maybe let's start off with the ladies. Mew, do you want to start and give a short intro, just maybe a short background on yourself and like a few lines about the family office?
Sure. Happy to do so. Thank you so much, Miguel, for the kind invitation. So I'm with Alpha Square Group. We're a single family office based in New York, but we are Asian background family, where the family, they were originally from mainland China and Taiwan region, mostly from the financial institution sector. So we've been here in New York for more than a decade, invest heavily into both growth venture as well as hedge fund investment. So, and also we optimistically help the family to do some like private equity or real estate type of investment as well. But like key focus are still on venture as well as like hedge fund or public fund allocation. So I could like elaborate more like in the following section. But like my personal background, like I used to work for another large Chinese enterprise group called Zhongzhi Enterprise Group. They are one of the largest asset manager based in China. And then like I used to work with them like in their Silicon Valley office, mostly helping them to do some venture type of investment. So like joined Alpha Square Group in late 2016, and then like right now mostly helping the family to develop and maintain key relationship with other family offices, and as well as sourcing some investment opportunity for both the private and public markets. So yeah.
Perfect. Thank you very much. Thank you very much, Mew. Maybe over to Singapore now. Mark, tell us a little bit about yourself in the family office. You're on mute, I think, Mark.
Okay, cool. So I'm with the GenTree Fund. GenTree Fund is a venture vehicle for a prominent Filipino business family, one of the leading conglomerates in the Philippines market. And our kind of mandate is very much to invest in early stage startups in the Philippines market for us to be able to allow them to work commercially with the Philippines conglomerate itself. So we invest typically pre-Series A to Series B companies, $1 to $3 million ticket sizes. Angle here of allowing them to commercially collaborate with SM Group or the Philippines business. And I guess when it comes to kind of collaboration, we look about it with two different lenses, right? So, there'll be the typical startup that will engage with the family business in the sense of a very arm's length basis. So, they'll depend on the startup for maybe 20–30% of the revenue. They will work on commercial vendor relationships with the startup, with the family conglomerate, in addition to also helping them connect in terms of channel partnerships to access the sort of user base that the conglomerate hosts. So that's our typical kind of startup that we like to invest in, right? So we are really maintaining the sort of independence of the startup while at the same time having that sort of upside through the commercial collaboration with the conglomerate. So that's our kind of sweet spot. As mentioned, $1 to $3 million ticket size. We also are a bit flexible in terms of being able to invest outside the Philippines as well. We want to invest outside the Philippines in startups that potentially could be quite interesting with being able to expand eventually into the Philippines market. We want to foster that sort of ability to access the Filipino market. And yeah, so it's us in a nutshell. It's actually very new venture vehicle. It's only been established 2 months ago, 2.5 months ago, actually. And yeah, this us in a nutshell. For me, my personal background prior to this, which I launched the fund. Prior to this, I was in the Go Ventures team, which is the Gojek-backed VC vehicle. We did investments like Mobile Premier League. We did investments like Rebel Foods, brought them into the Indonesian market. Prior to this as well, I was in the Gojek corporate development team. We did the Coins.ph acquisition, which is one of the largest startup exits in the Philippines market to date. And yeah, that's me in a short nutshell.
Mark. Luck, I will get to you last. I will save you for later. We'll get to the gentleman here on site first. Maybe let's start with Jonathan.
Sure. So I work actually for a UK-based family office. The family itself is basically very much cross-asset. What I'm doing here in Berlin is basically building out an impact investing stream and basically looking at various sectors that we think Berlin's quite good at. We found quite a lot here that we like, and spent the last year or so building out our presence and getting to know the network, and now we're basically ready to go. Before that, I worked for many years in the City of London for a large Swiss investment bank. So this time in prime brokerage, so now I'm kind of sitting on the other side of the fence, as it were.
Great. All right, Sebastian.
Yeah, hi, I'm Sebastian. I'm working for Millennium, which is a family office, first generation, based in Berlin, and we are invested in different assets, so from real estate in Berlin and the US, as well as venture capital in Berlin, and we even started 20 years ago something you would today call company builder. So it's really a broad experience we cover. And I'm a lawyer, but I work in digital and consulting business since 10 years.
All right, awesome. So we've covered the family offices on our panel today. I think it's very important to start off with them. But one thing we shouldn't forget is, the family wealth is coming, it's being generated at a corporate level. So we invited today Luck, calling us from Bangkok, to also provide some perspective from corporates in Thailand and in the region. Luck, could you please introduce yourself?
Sure. Hi everyone. This is Luck. So I'm actually a managing director of a company called Top Ventures, which is the venture capital arm of the company Thaioil. We are doing a few things. So our main source of income is from the refinery and petrochemicals, but we're also doing like power generations, logistics, and also chemical and solvent trading. So a few things, right? Top Venture itself is just recently set up under the company's for like almost a year and a half, almost 2 years. And we are a new fund, but we invest into, and we look into 3 verticals. The first one is the industrial technology, hardware, software, anything that can be used in our own facilities, right? And also other industry as well. The second one is we are looking at the sustainability technology. So we are talking about biochemicals, circular economies, renewables. And the last one is what is quite a little bit like a tailor for us. We call it hydrocarbon disruptions, but anything that is going to hurt our bottom lines, like new mobilities, new energy, like battery applications. Those are the things that we are looking for. Under the VC, we do 2 things. We do 2 things with startups, right? The first one is a typical venture investment. But as where we are looking at the seeds and Series A startups, a typical check size would be a few $100,000 up to a few millions. On the other side, as a company, we are doing the venture partnership where we work with startup. It doesn't have to be under our portfolios. So we try to open ourselves up as a sandbox for our collaboration with startup, trying to give them any value that we can offer, and as well as looking for potential for us to partner and also to invest in the future. So that's pretty much it. My background is I'm a chemical engineer by training, but with an MBA background from the States. So yeah.
All right. Thank you very much, Luck. I just want to make sure that we're not missing anybody. We're supposed to have one more person, but Lito's not with us, right? I don't think so. Is he there? No, I don't see Lito. But anyway, maybe, we're now speaking at the occasion of the AsiaBerlin Summit. I want to start off with our local expert, I guess. I'm looking at you, Sebastian. You're the German family office here. A lot of these other family offices, like Jonathan, for example, has come here, looking at opportunities in Germany. Yeah. Mew, from New York, starting to look at Europe as well. Luck was here in September. We had some nice beers in a few breweries here. We can't do that, obviously, right now.
Of course we should, yeah. We should do next time. Yeah.
The next time, we're all looking forward to it. But until then, Tell us about what you're looking at as a family office, being the expert here in this market, having looked at it, which asset classes are exciting you, where are you spending your time?
Yeah, both. That means we have asset classes is real estate, for example, and you already mentioned COVID issues. So on real estate, currently we don't see any movement, so nobody sells, nobody buys. Yeah, so it's like frozen market. And but we don't see kind of bankruptcy, so that tenants aren't able to pay the rent, so that doesn't occur. So keep fingers crossed. And on venture capital side, we see that marketing is much more difficult than it was pre-COVID, because I think it's a kind of monopoly in the e-commerce market that there's the spending for marketing goes down. But driven by the fact that you can easily reduce the work spendings in Germany by social law, and which will be also in 2021 the same. So it's the firms do very well. Yeah. So if you have reduced revenue, then you can reduce the expense for your workforce.
Right.
Yeah.
How do you think about venture capital as an asset class? I mean, as much as you can share with us, in terms of, how you allocate there. In most family offices, and I managed one myself also in a previous lifetime, venture normally represents a very small portion of the portfolio because it's obviously, the high risk part of it. You coming from a venture building background, being an operator yourself, what's your view on venture capital?
So mentioning the company building part, it's a bigger one. Yeah, the traditional venture capital is also a small portion of the value, but you have to have in mind that it's easy to join or to be part of venture capital, but the question mark for us is also how to handle it. So it means how deep are you involved in managing, steering, and so on, or is it just spending some money there, and that's a strategy discussion we have every day, or at least every month, because does it make sense to spend small money in different companies without any real steering possibility?
Understand. All right. Jonathan, we're very happy to hear, UK-based family starting to look at Germany and Central Europe. What's exciting you? What brought you here to Berlin? You said impact investing earlier. What are the opportunities?
So this is a new venture that the family's looking at. Principally, Berlin has quite a huge sort of scientific institution behind it amongst universities. So we quite like that. There's a lot of exciting new ideas and tech stuff that's coming out. Food in particular is something we've been looking at quite recently. So it's something that gets us quite excited about the whole Berlin as a city itself. Germany on a wider basis as well. Marketing is land of ideas. And we go along with that. I think as well as of everything, particularly in the COVID crisis right now, we see a big throwing of cash and sort of new ideas and everyone taking impact a lot more seriously. And this could also be the catalyst that gets, when we've got a whole generation previously that's always gone into their consulting businesses or investment banking or to law. Now maybe this is the tipping point when start your own startup, go somewhere, do something, make a difference.
Right.
And we like to think that that's what we're after.
Yeah, no, it's definitely a big topic. This theme has been, recurring throughout the entire summit. Impact investing, SDG. People see the need for it now, the importance of it.
Yeah, we speak to the wider scene here as well, and it seems pretty much everyone's seeing exactly this trend. Including from the big institutions now also want to get on board. But we still think, one thing that we really like about, or say where we see big opportunity in Berlin in particular, is that you got a huge amount of government help in the early stages. German investors, from our experience, tend to be a bit more on the conservative side. So there's this gap, this sweet spot where we think sort of around the early stages where we can get in and basically take some of these ideas forward. We're looking for mission driven, but also return too. And we think we really think we can get something out of that.
All right, perfect. Mark, I'm going to ask you a question now, but before that, I just want to tell Mew and Luck, I mean, the purpose of this today is really to create dialogue. So I don't want to be the only one asking questions. I'm going to get to you, the two of you after Mark. Please think of, I mean, you are both looking at entering Europe and starting to invest in Europe. What are the things you want to know about from Jonathan and Sebastian here? You know, like what are the things that you want to know as a family office and as a corporate VC? So I'll get to you. I'll jump to Mark first right now. Mark, I mean, you mentioned earlier in the introduction, this is a prominent family from the Philippines that have just recently launched this fund. 2 months you've been doing this. In the Philippines, you know, that's my home country. There's not a big venture capital scene yet, right? It's growing quite fast, and I'm very optimistic about it. But not a lot of families know about this asset class. What are you seeing there? You know, like coming from this family, the family office background, like why is there suddenly an interest to invest into this asset class?
Sure. Thanks for the question. Really good question, Anchor. Yeah, I think eventually you're starting to see family conglomerates and conglomerates in the Philippines really delve into the venture asset class. The main reasons is, you know, they are getting disrupted to some extent by some of the new technologies in the market. You know, things like Grab, things like Gojek have proliferated in the digital economy space, especially with COVID. Things are being digitalized to quite a large extent. So I think it's very much, do you get in or do you get left behind, right? And when it comes to startups that we could potentially work with, I guess there's really two angles to this, right? So there are a group of startups that you typically work with from an arm's length relationship basis. Those startups wouldn't actually affect the way your conglomerate's day-to-day businesses are run. In a more broader way, what they would be doing is working on commercial vendor relationships with your conglomerate, using your conglomerate as a channel partner to be able to access a new user base, which is quite important, you know, especially for an early stage startup, to reduce their customer acquisition costs, marketing spend. So there's one group of startups, and there's another group of startups that will actually disrupt the conglomerates, right? It will actually change the way day-to-day businesses are run. It will change the way operational process is done. So there are two groups of them in that sense. And I think when startups, when conglomerates actually look at startups and actually classify them in that way, you are able to actually distinguish whether you'll be using your balance sheet per se, or will you be using a family office vehicle to actually make the investments. I think that's where the decision tree actually splits up. Naturally, when you use your balance sheet, there's a bit more strategic underpinning to the deal, and it tends to be a bit more related to the core business. I think that's the way we are looking at it from a GenTree sort of perspective and from the conglomerate's perspective as well, is how do we actually underpin the fund returns by investing in things that could actually work commercially with SM rather than something that would disrupt the core. We would still look at guys that would disrupt the core, but typically that would be a bit more stringent. We'll be looking for things that actually has a strong sort of technological competitive advantage. And I think that's the main underpinning reason why people are actually moving into this space from a conglomerate level, right? Because you want to be able to, you know, foster this sort of ability to work with new startups, providing new solutions, or alternatively invest on a balance sheet level and, you know, bring something in that could change the way the business operations run. And I guess when it comes to sort of funding stages and how the funding timeline has developed in the Philippines, so I guess we are a little bit behind Indonesia and a little bit behind Thailand. So in Thailand, that's where you actually see the entire build up of the corporate VC space. You get very strong corporate VCs like TrueCorp. You get guys that like SCB as well has their own sort of venture vehicle as well. And in tendency in Thai space is that you get a lot of strategic sort of investments where it's actually balance sheet driven. And so that changes the kind of dynamics of the market as well. So in Indonesia is a little bit of a different story, where Indonesia, I think startups tend to remain independent. They get invested in by a few conglomerates at a time. So I think in the way the market actually plays out is actually quite interesting in the Southeast Asian economy. And there's no one answer in the sense that Thailand is developing their own way, Indonesia is developing their own way, and I bet Philippines is going to develop in their own way as well. I think the major key thing from a GenTree SM family conglomerate perspective is very much for us to be able to maintain the independence of our startups, because we view that if we were to take too strategic a touch too early on, it actually may impact the kind of trajectory and growth of the startups that we invest in.
All right. I mean, I love what you mentioned, and I think that's important to point out to the audience. You know, like from family offices actually have multiple pockets to invest from ultimately, right? I mean, if your first touch point is the family, it doesn't mean that they cannot pass you to the corporate, which would be investing from the balance sheet. Doesn't also mean that the family members may decide to come in as angel investors themselves as individuals, which I've also seen in the past. But I want to touch on another point you mentioned about like Thailand, you know, being really ahead of the game here. They have a huge corporate venture ecosystem there already. It's on the third wave. You know, it's not just telcos, not just banks, but real estate firms, oil firms have their own CVCs as well. Luck, I mean, you've invested in the US, starting to look at Europe. I mean, what do you want to know? What do you want to know from our European family offices?
Yeah, thank you. Yeah, that would be really helpful. So one thing that I always think about when entering to the new market, right, is to figure out the best way to actually present in the ecosystem. So one thing that I noticed about Europe is most of the time we will look at Europe as a single market, right? And maybe like a market itself is not. It's really well established, and maybe the startup can go out and take the piece in every countries in the ecosystem, right? But from the perspective of the business and operations, I wonder if that's also the same case where the business and operations are like treated as a single I don't know, like operation base and everything like that as well, or is it still like more diverse? Where should we figure out the best way to get into the maybe like the parts that is more I'm not sure, but it's the best entry steps to get into Europe. That would be like the overarching questions that I have here.
Do any of you want to pick that up?
I mean, I could start with that because I kind of basically done this from what I've been doing
Perfect.
pretty much for the last year.
Yeah.
Basically, it's just a question of going around, meeting people, having lots of coffees. I mean, it's been a bit difficult in the last 6 months, let's be honest, but it's just a question of going around. Half the time you'll be wasting your time completely, but you'll find some gems of people that will link you into pretty much the whole system. But you just have to keep at it.
Right.
As Sebastian knows too, I mean, you know, we've met previously, and again, it was a coffee from a mutual introduction. Go along to accelerators, they all hold events, go along to these things and just put your name out there. But I mean, I think you have to also be realistic as well, have some idea about what you're looking for, because I mean, you know, I found in the beginning when I sort of like, I'm looking from an impact investing side, you kind of get all sorts of rubbish thrown at you. So, you know, you need to precise a little bit. Sebastian helped me with this too, actually. As you know, you need to precise a little bit. Look, what is it I'm after?
Right.
Okay, who are the stakeholders here? Who's the government side? And that's one point. The governmental institutions, the banks, EBB, KfW, I mean, they're all extremely helpful. Mm-hmm. But you have to ask for help, and I think that's the thing. Just don't be scared to ask, and just get out there.
Perfect.
It's as simple as that. And I know that right now that's tricky, but it's still doable.
Anything to add?
Yeah, that's as you mentioned. You have to establish your own network. You have to find kind of focus and the story also. You tell about yourself so that people get kind of connected with you as a person, so that they have you in mind. And you should, you may find some leading investors you may join as co-investors. For example, we often do co-investments with family and friends, and so it's easier for you to do due diligence, to learn the market, to learn how to assess, especially in the European environment, potential targets.
All right.
Yeah, I think also I would add to that as well, some local funds too.
Yep.
They can be a great source of network, but also deal flow as well, and also getting to know exactly how things work, the nitty gritty.
Yeah.
And also other things too, like getting good lawyers and structures and this type of thing. I mean, you know, there's.
Yep. I think, I mean, what you mentioned about the funds, I mean, this is really a great source of like insight into an ecosystem, and a lot of families have that strategy, right? The fund-to-fund strategy, where you put money into a fund and at the same time, you know, find ways to directly co-invest with them. And I guess that's a good time to bring you in, Mew. I mean, I know you've invested in scale-ups in the US. You've invested in a lot of funds, starting to look at Europe now. Is there anything in particular you want to know from these two gentlemen over here?
Hello? Can everyone hear me?
Yeah, we're
Disconnected.
here.
I think I kind of lost the moderator.
No, we hear you.
Yeah, Mew, I think.
Oh,
Yeah, I
okay.
think all three of us did.
So I'm fine, but like, hey Miguel, can you hear me?
Yes, we hear you.
Yes.
Yeah, but do you mind repeating the question again? Because I believe
Sure. No, I was just saying that we were talking about fund-of-funds vehicles here now, and I know that you've invested in scale-ups in the US, but also in funds, and you've been looking at a lot of different strategies coming into Europe. Is there anything that you want to know from these two gentlemen here? You know, like what, like.
Yes, I do have a couple questions. Like just like Miguel mentioned, we are allocating both in funds and direct. And of course, as a single family office, we prefer to go direct. And like the reason why we allocate across different managers is first because of course like to some sectors we don't have their the industry expertise, just like biotech or like pharmaceutical, those type of industry. That's why we set it early stage managers, also that we could learn from the GPs. But in most cases, like the reason why we invested in like fund is because we want to generate some deal flow. So that's why like we sit a lot of like either early stage fintech GP or like early stage enterprise software managers, which are like two key sector focus here at Alpha Square team. And also like my question for you will be like because as mentioned to Miguel before, we always want to get into the European markets, and then but we have not yet find a good way to get into the market. Like that's why we are looking at we are talking to some like managers in either German or other European country, so that to like either first get some sense about the overall market, and the second thing to get some co-investment. But at the same time, I'm just wondering, like from the family office perspective, do you think like investing into a fund manager is a better way to get into the region, or do you prefer to work together with some very close network or family office network to co-invest alongside with a deal to get into the market? Just would love to learn from your perspective.
So I guess she's asking, I mean, is it like a fund strategy first or just like a syndicate of family offices? I mean, I don't know if you have an opinion on that.
Yeah, I think it depends. If you want to just have some investments in this region, then a fund would be sufficient. But if you really want to know the region, then a fund wouldn't help you so much because they don't explain so much. So in this case, you should do the same maybe as Jonathan did. So you should have somebody here in this region who is able to establish a network and so on, and find other family offices, other fund investors, so that you have your own network, you know the people and so on. Mm-hmm. Yeah, because just investing in the fund, they won't explain a lot for you.
I mean, I would add to that. I think going into a fund is definitely one way in, but I don't think it's hard to beat having a presence and building your own network. And like I said, there's a bit of dog work involved, but you get the right people. I think co-investing straight out, I mean, that's something as well. If that's something you're comfortable doing, then fine. But I mean, going in with a fund is probably a good way. And also, I mean, let's think about how you structure it too. Because I mean, if you go into a fund with the basis of saying, look, we'll put this ticket size in on the basis that you help us with deal flow and you help us set out. Generally speaking, people will be open to that. Mm-hmm. But again, that's a conversation we had at the beginning. I would say. I mean. Clearly, this is something. I mean,
they would need somebody like you, Jonathan, that's willing to go out and meet as many people as possible. Then, and that's not hard. It's a little bit hard to find. Would you say?
It's fun.
It's
good fun, but there's a lot of times when you do find like I'm wasting my time here. But I think to be honest, I think that's the way forward. I think actually, if you could go into a fund, and I think that's probably quite a time-efficient way of doing things. Mm-hmm. Again, assuming what sectors that you want to go in. I mean, if you're looking for something that's on the, I mean, you'll find all here actually, to be honest. But mm-hmm. but I think that's an important thing to have in mind beforehand.
Yeah, fair. All right, I want to flip the tables a little bit now. We've been asking the European side questions. I know that your coverage is mostly Europe, but I mean, we have a lot of experts here I mean, maybe they can just tell you a little bit also about the Asian markets and what's worth looking into there. I'll ask the first question, and then I mean, you can think about what you want to know. I'll ask it first to Mew. She's there, yeah. Mew, I mean, China. We have to talk about, right? Like, I mean, the family comes from there. It's the biggest market. Like, what should we be looking into? Tell us a little bit about what's exciting.
Thank you so much, Miguel. Like, I think right now, like, because our family office, of course, we allocate not only in the US but also in China, and like this day, like especially post COVID, like we pay extra or additional attention to those cloud computing and e-commerce company. Like I think it's not only in China but also like around the globe. We are paying a lot of attention to those cloud computing, e-commerce or biotech company, both on the private and public sector. So because like we feel like post-COVID, like there are more and more enterprise or like people, they do have the demand to go digitalization. And then I feel like cloud computing, which was their like theme for our investment, are still like keeping to grow a lot. And also in terms of the Chinese market, very interesting. We feel like this day we just invested in Coatue EV fund, which is a thematic fund. So the reason why is because like electronic vehicle, it's a sector or it's a vertical that we are very bullish about. And then like after knowing about the Coatue, and also like I believe everyone knows the big 3 EV company in China, like XPeng, NIO, and also like Li Auto. So we invested in NIO and Li Auto at their IPO and then got a very, very good return. That's why we're very bullish about the overall trend of the Chinese EV and the global EV company, like looking at Tesla, right? It's great. It's been growing very fast. So that is something that we are paying attention. And at the same time, like healthcare has been growing very well in China. So like healthcare, either healthcare service or biotech company are key focus for us in the Chinese market at this point of time. So we co-invested alongside with our fund manager or like work together with our local connection to get access to those deal flow. But since I'm not a healthcare expertise, so I cannot share a lot on that front, but like healthcare service and also like EV are like a 2 very thematic trend that we see in China right now. Yeah.
So electric vehicles, big theme. Maybe the oil company wants to share some insights here. Luck, I mean, you mentioned the 3 pillars that you invest in. I mean, is EV also on your radar? And if not, tell us, like, what's exciting in the Southeast Asian region?
Sure. Thank you, Miguel. So EV is definitely one of the key trends that we are having our eyes on, right? So as an oil company, we are looking at some things that is going to last into the future, and also having the potential impact to our to our business as well. So EV is definitely under our radar. The ecosystem right now is still to be built. I mean, Southeast Asia, especially in Thailand, I believe that's it's the matter of the when, but not if there's going to be here or not. So I think that is quite clear. A few things about Thailand that I think we are prepping ourselves to the EV would be on the policy level. And also having the corporates the major auto, because Thailand is one of the auto hub, right? So it is actually a potential for us to really get into that. The key question that we are still trying to figure out is when it's going to move, and the other key questions that we are still thinking is whether it's going to have who will be the players in the market, whether it's going to be like maybe Chinese companies trying to get into the market here, or is it going to be some local brands, or even like a major brand who's going to flip their production lines here from the conventional ICE into something more like an electrical vehicle drive. So that's a few ambiguity that we are still working through that. But as I said, I think one thing that we want to be here is to make sure that as a Thai corporate, right, we want to provide and we want to lend our hands into like facilitating the companies that are going to help us coming here and try to grow the trends of the EV here as well. Apart from EV, one of the companies that we are looking into and are also considering more is trying to look beyond just the drivetrain. Right? We are looking at the autonomous vehicle. That's quite obvious, but there's a few aspects to that, right? From the sensor to integrators and to all the data processing and everything. So even like the control. So there's a few elements in order to execute that autonomous vehicle, and I think that's quite an interesting idea for us to look into, because frankly we have to look at the companies as the how much resources that we have, right? Are we going to get involved into the EV productions, or are we going to look into something that is more suitable for the supply chain, where we can get in and deliver some of our value here? So yeah, the one thing that gets us excited is about the autonomous vehicle, and also anything that related to that.
All right, so mobility, big topic. Gentlemen, any questions for our Asian families?
Maybe the question you've mentioned before, reverse, means if we wanted to enter the Asian market, of course Asia is much bigger than Berlin, we know, and what would be an approach for us? So should we start invest in a fund, or should we establish some person in this region? Maybe it's different to answer for each Asian state, but at a glance, is there any idea from your side or any advice you may help us with?
Mark, do you want to start? I mean, I know you have private equity, venture capital, and now family office experience, so maybe you want to start off.
Actually, to be honest, I think it's worthwhile just doing direct investments. I think while funds here, they do give you access to certain amount of deal flow. I mean, Southeast Asia isn't really that big. If you have a guy on the ground, doing deal sourcing, all roads kind of converge at some point. So you do kind of get the deal flow from that everyone kind of sees, kind of the same kind of deal flow. It's quite a large base, especially if you go into like Indonesian market. Generally, funds kind of see the same deal flow, right? So if you have a guy on the ground, you're going to get access to the same deal flow. And then what's the point of paying an additional 2% management fee, right? So I think that's my kind of perspective in that, you could save quite a bit of money actually just doing it direct. It's just a factor of what stage the kind of startup industry is at, right? So you're not going to get the same kind of depth in B2b SaaS, for instance, in the Southeast Asian region. It's probably worthwhile, just putting a guy here, someone with experience, previous experience in the venture capital industry, and then you're probably going to get the same sort of deal funnel.
Perfect. Thank you. Mew, anything you want to add to that? Like strategies, market entry strategies?
Oh, by the way, so when I mention all of that is specific to Southeast Asia, not so much China. So I'm only experienced in Southeast Asia.
All right.
Yeah,
that's why we need your perspective now, Mew.
Yeah, I do have some tips getting into the Chinese market. I would say, like, even though a lot of people, they started to invest into China through fund manager, but like from our perspective, or from my personal advice, it would be great if you could first try to find a trusted partner even before you invest into fund, because like there are a lot of fund manager in China right now, and then like it's very difficult to say which one is better or which one is good, unless you got a very trusted either family office or local connection. So like just talk to them and then ask for their experience or like introduction for those real legit fund manager in China, and then like you make a decision either on the direct or on their fund investment. And also like a small piece of tips, like invest directly in China. Even though our family has very strong network in China, but we try not to do any like SPV type of investment with unless the partner is very trusted. Because the structure is very complicated in China. So like if a foreign investor invest directly into the company through the SPV type of structure, the liquidation problem will be really problematic. Trust me. Mm-hmm. So like just try not to go through SPV, even though it seems like the deal is very good, but like the accept. It's a real big problem from our peers' experience. That's why right now, like we only do directly into the company, like who we've known for long, or we go with very trusted like fund manager to get into the region. But before both of that, like just try to find a trusted family office or partner in China before you get into the region, because he has, I believe he or she has better understanding with the local like government relationship, which is critically important in China. So yeah, that is my personal like advice.
Thank you, Mew. We're there's a part 2 of this session, but I think I want to give one last question for Jonathan. What you're curious about?
Yeah, I mean, how do you see impact investing themes in Southeast Asia? So, I mean, it's becoming a very big thing here. I haven't read much about what's going on in Asia, but are you seeing a huge sort of exponential growth that we're seeing here too?
Who wants to take this?
I'm happy to. Yes, so you are seeing a growth of impact funds, quite evidently because the region is skewed a little bit towards the base of the pyramid. So, you know, Class B, Class C consumers in terms of Nielsen rating. So, you know, I think ideas and startups that could marry the both of it, right? So, you know, kind of covering the UN development goals while at the same time generating some sort of sustainable profit in terms of path to profitability. I think everyone's looking at them, just mainly because, you know, there's quite a significant amount of growth that our region has to undergo, and not just at the Class A level. You know, Class A consumers are pretty much in the same level that you would have in the West. You know, if you're from the Class A kind of society, you're living in a very developed sort of manner, right? But obviously that same sort of access to bank accounts, access to, you know, insurance, access to financial services, access to consumer options, you don't have that at the Class B, Class C level. So yeah, I think impact funds are playing quite a big role, and I'm really bullish about them because they marry both, right? Obviously the kind of hurdle rate that they will be going for is a little bit different, but I think that sort of mandate is bought in by the LPs that subscribe to those sort of funds.
All right. Okay, thank you very much. So I think right now we'll take a little bit of a pause, a little transition. Thank you very much, Sebastian, Jonathan. Thank you for joining us and all the insights. The second part of our session is we actually invited some of the best funds here in Berlin so that we can get into the concrete details. So they all have portfolios that are looking to expand into Asia. And we will ask them to talk about their fund strategy, talk about specific verticals or even companies that have opportunities in Asia. And we will ask now our Asian investors to provide some feedback. So we have all heard about fund reverse pitching. In this case, it's funds pitching from the perspective of internationalization. So our Asian investors, Mew, Luck, Mark, we will ask you to provide feedback and questions about the strategies of these funds and, you know, like the verticals that they think make sense to start bringing to Asia. And just, you know, like they want your insights. So again, it's a conversation that we want to encourage today. How the format is, we will ask each of the funds to have 10 minutes to talk, and then we will ask you three to share feedback or ask questions, maybe 3 to 4 minutes altogether. So, yep, 10 minutes. So, all right, having said that, I would like to welcome Florian from Project A to start it off.
So just talking about Project A real quick, we started in 2012, so for the Berlin ecosystem, we're probably one of the more experienced funds. Just to give you a brief introduction to what we do, we invest all over Europe. We invest early stage, so that means seed stage, Series A, that's when we try to get in. We try to be, when we enter, one of the lead funds in those rounds. And there are two special things about us, and I think that is probably noticeable. We have a fairly large team of operational experts. So we have more than 85 people, almost 90 now, just doing support for the portfolio companies we invest in. The portfolio today comprises of 50 companies, and we tend to work for half of them in any given month, doing things like recruiting, marketing support. Half of the 90 people are in the tech space, so we try to help on the development side. And the other important thing that we probably, that is quite noticeable, that we also started to co-invest with private equity funds to help them bring operational digital know-how into things. We have roughly 500 million euros assets under management right now. That's in 4 funds, 3 main funds and 1 opportunity fund. And the first fund was 80 million euros, second 140, then a little more than 200, and then the rest is in an opportunity fund that invests in the opportunities that we find in Fund 1. As we said, we invested all over Europe, or we invest all over Europe, with 50% coming not from Germany but beyond. On average, that's on the rise. We tend to invest 60-65% in B2b companies, so that's probably also something that's noticeable. And we've really established ourselves as one of the preferred co-investors of definitely Europe's leading funds like Index, Excel, but also more and more US funds that come to Europe, and we try to be a good partner for them. So far, if you look at the performance of the funds, we're all pretty, I mean, it's all not completely paid back, but if you look at the track record right now, we're all in the net IRRs of 20% and more. So we are hopeful that we'll end up with a 3x in the end in each of the funds. Presenting an opportunity to you right now, concretely, that's the 5 partners so far. I promise to you the next partner is not going to be a middle-aged male, but is going to be a female, and ideally also from a different background than we are. Giving you a little bit of background, what's coming now is a Project A Opportunity Fund 2 that's going to invest in the basically most promising opportunities that you'll find in portfolios of Fund 2 and of Fund 3. We are going to look basically for raising 60 to 70 million, where we're quite positive that we'll be able to deploy that money in 6 or 7 leading opportunities of those 2 funds within the next 18 to 24 months. Yeah? So, and those opportunities will be pretty well diversified across different areas. We're talking about, if you look at action item number 3 here, it's companies like Crew, which is one of Europe's leading digital health companies, which obviously benefited largely from COVID. It's Trade Republic, which is kind of the European version of Robinhood that you might have heard of. Senda is right now probably the leading trucking logistics company within Europe. And Katawiki is the leading European marketplace for collectibles. So all of those are very much, are very likely going to do another round within the next 18 to 24 months. And we'll be able to get an allocation of 5 to 10 million in each of these companies. Going a little more into detail in the interest of time, what is one thing that's probably very interesting for you that could also become an interesting company for Asia is a company called Spryker. That's the winning company in Fund 1, at least as it looks like right now. It's a so-called headless e-commerce platform. So what do? They basically provide an e-commerce framework that allows especially B2B companies, so manufacturers, but also B2B retailers, to have a state-of-the-art e-commerce presence. And headless basically describes that it's architecturally designed in a way that they are basically agnostic from where the orders come from. So it could actually be machines ordering spare parts for themselves. And it's has reached great traction. So this year they're probably going to do roughly in the sense of 20 million revenue, 18 million ARR, and they're going to do another round next year. We own 30% of the company, so it will definitely be something where the opportunity fund will have opportunity to invest, but also they don't have any Asian customers so far. And looking also at Gartner Quadrant and Forrester and things like that, they're definitely one of the most innovative companies in that space right now. So it could be extremely interesting to bring that company to Asia. Yeah. So that's basically I think the 10 minutes for me now. Oh, 5 minutes left. Oh, that's even better. Yeah. So then probably go into a little more detail of this fund that we're currently raising for. So we'll be able to deploy something like 4 to 10 million per company, per of the 6 to 7 companies. We think that the holding period will not be longer than 4 to 5 years. So that's probably also a very interesting product compared to early stage, where the holding periods tend to be 10 to 12 years. So I think that is something that's quite exciting. And I know you family offices are often very much conscious of management fee. So we obviously cater for that since it's the existing portfolio. The management fee will be in the range of 1% of the invested capital. So a rather low hurdle rate will be 6%. And obviously we are going to invest also as managers 2% of the fund ourselves. We are basically starting to fundraise right now. We already have quite a good interest from existing investors in our current LPs. So that's probably also noticeable for you. We roughly have 90% of the LPs that are in our funds are returning LPs across the 3 funds. Yeah? So everybody that has been in Fund 1 is also invested in Fund 2, and there's only 2 larger investors that have not continued to invest with us in Fund 3, and that is basically something I think that's quite unique, that we've shown a pretty good traction here. Another thing that is probably noticeable for you, especially if you're also interested in digitalization, is that we continuously work with a lot of family businesses in Germany that are also our LPs. So we tend to help them continuously with the operational expertise that we have on their own digitalization efforts. Yeah? So that's also something that obviously we would be very interested in pursuing also in the direction of Asia. Asia is for us definitely a very interesting angle, especially if you look at the political situation in the US. I guess that our interest in Asia is not only culturally driven, but also I think very economically sensible, because you don't know what's going to happen there. And I think for a lot of the companies in our portfolio, Asia might actually be the more promising internationalization angle than the US is. And that trend, if that continues, I think that shows why our interest in Asia is genuinely high. Yeah. So that would be it from me. I guess we have a couple of 4 more minutes later on, and I'd be more than happy to hand over to my colleague from Redstone.
I will join you.
Oh, okay.
They can ask their questions right now before we move on.
Perfect.
Mark, Locke, Mew, whoever has questions.
Yeah, so I noticed that your investment holding period was actually 18 to 24 months. Is that sort of the kind of time frame you hope to exit your seed stage startups that you invest in?
I have to admit I didn't get the question, just because it was...
That your investment period is 18 to 24 months.
Yeah.
So do you hope to exit within 18 to 24 months after you make an investment?
We think, I mean, all of the companies that we're looking for here, or looking at here, are all minimum 5 to 6 years old. Yeah. So, I mean, we cannot guarantee an exit, but I think the likelihood of an exit within the next 4 to 6 years is quite high, because all of those companies are fairly advanced. I mean, it's minimum Series D, several Series D companies. So, I mean, you don't know. I mean, obviously, we cannot guarantee it. Yeah, but I think the likelihood that there will be a pretty fast cash cycle is quite high. Yeah.
Maybe if I can add to that question. So I understand that the investment period is maybe it's I see the figure is 18 to 24 months up to 36 months, right? So yeah. For us the deployment rate seems to be quite quick. So I understand. I'm assuming that is because you are looking at the investing into the leading deals from the previous fund. Is that the case? Because I assume that you don't have to really look for the new deal, so that's more like a deployment into something over that fund.
Absolutely.
Right?
I mean, what we think about, and that's not fully decided on, it might be that we like leave 10% of the fund where we have the optionality to invest in a growth deal outside of the existing portfolio if we get the opportunity to invest. but the current idea is to focus on the existing portfolio where we have quite high visibility on whether there's rounds that going to happen within the next 18 to 24, max 36 months. So that's the reason why. I mean, we are an investor in all of those companies already. So we have board seats in most of those companies. So we have quite a good visibility on when those rounds are at least, strived for to happen. I mean, obviously in the current climate, it's not as easily plannable. Yeah. But I think if you look at least 5 of those 7 companies, they're either benefiting from the current situation, like Crew is definitely benefiting from it, digital health, or they're kind of agnostic. Yeah, like a Spryker, B2b software sales company, or Sender. It's not so much kind of hit by the current COVID crisis. And as, I don't know how you currently see the market, but to our experience or to what we currently see, if in the hit companies or the companies that are developing very well, the financing climate or the investment climate continues to be very stable, and you don't see a dip in valuations. Yeah.
Hey Florence, I do have one question. Like it seems like it's more like a growth venture type of fund manager. So like but compared to the while looking at the total fund size is around 50 to 75 million. So just wondering what is your average check size for each of the company, and also like if it's if the check size is not large enough for those growth stage company, how could you maintain the influence or like maintain their the relationship with the management team?
Yeah, the interesting piece in all of those companies, we already own a minimum of 10% through our current funds. Yeah, so this tickets that I'm just talking about, average 4 to 10 million, is just going to be complementing an already existing investment. Yeah, so can we guarantee our influence long term if SoftBank invests? Very hard to do. Yeah, so but then I guess we can also do a secondary, which we probably would, given SoftBank's current track record. But I think right now, this construct only makes sense in existing portfolio companies where you already have existing influence and where you also can make sure this kind of allocation through existing influence or through the pro rata rights. In most of those companies, in 5 out of the 7, we have already secured our pro rata right, and this is basically what we would be filling with 4 to 10 million through the existing contracts. And this is just using this pro rata right. So we don't have to do anything to be able to place it. We just have the pro rata right to do this. In the only company where we don't have this right already in the contracts, we own 30%. So I'm pretty sure that we can, if we want to invest, we can do this. Yeah. So, but that's kind of the construct. But you're 100% right that if you would have an independent growth fund investing into independent companies that are not in the portfolio right now, this setup wouldn't make any sense. Yeah. This only makes sense because it complements existing investment activity and it doubles down on the winners of existing investment activity, and that's why you can do it at limited management fee also. I mean, that's basically the idea. Yeah? I think in order to get to know us, it's probably a pretty good entry product, but obviously, I mean, we will do main funds in the early stage VC area also end of next year. Yeah, so that's very likely going to be the timeline there if the world doesn't fall apart in the meantime. So, but that's basically the plan there. Yeah.
All right. Thank you very much, Florian.
Sure.
All right. Next, we will ask Stefano from Redstone to please come join us, or take the stage, in fact.
Okay. I feel like in a TV show. This is amazing. So. Hi everybody, my name is Stefano. I'm partner at Redstone. I'm going to tell you more about what we do and some of our fund activities, as well as some of our interesting companies that are actually going to Southeast Asia. Well, first of all, let me start quickly to tell you a bit about what we do. We're a venture capital firm. Just like Project A, we kind of proposing a bit of a diverse, we think quite interesting model. So we manage multiple venture capital investment activities, and we do this in 2 ways. One is we have our own funds. We've specifically designed sector-focused funds on specific topics invested in Europe, and I will go to give you a couple of examples on that. And on top of that, something that we've done for the last 6 years, we've been activating corporate venture capital. In Europe, just like in Asia, corporates want to activate capital, but it's really hard. You need to build a network, a healthy deal flow. It has to make sense. And we've been working for 40 plus corporates, mainly in Europe, as well as in Korea and Japan, in order to make that happen. So we partner together, we make funds together, we manage the corporate venture capital activities. I want to focus a bit more on the sector funds. So the way we do it is the following. We have two things that we're really good at. One is data science. We are one of those few investment firms that has its own data science team. I myself am a data scientist. I had fun doing a PhD on the topic. And when I moved to venture capital, I decided to make investing a bit more evidence-based. It's obviously you need to talk about relationships and building those with founders, but at the same time, in order to develop a thesis, an investment thesis, you need to use evidence, and that's important for us. On top of that, we've been, myself and the other partners have been doing VC for quite some time now. We have quite a great network and processes. And what we do when we build sector-focused fund, we want to find a co-GP, a partner that is bringing some strategic expertise onto the table in the sector that we're investing in. This is one example, something that I'm quite busy with right now, Future Industry Ventures. This is a fund that we've done together with SBI, the Japanese financial conglomerate. And the idea really there is to invest the tickets from 2 to 6 million to early stage companies within Europe, working on a software or hardware solution, innovating the way industrial processes work. Why Europe and why this thesis? 2 reasons. One is that what we found out using data is that in Europe we have high level of innovations with processes, with valuations that are not as high as the ones you would say in the US. And 2, we've been exploring this thesis with SBI a lot. Places such as Japan and Korea suffer from lack of innovation, sometimes from within. And there is quite an appetite to tap and be exposed to companies that are doing something new in industrial processes in Europe. The thesis, I will not be focusing too much into that, but maybe it's the keywords. What we imagine the future of industrial processes be like is with 4 pillars. We imagine it to be more decentralized, more connected, sustainable, and secure. So we focus on technologies that are trying somehow to make that happen within Europe. This is one fund. As I said, we have multiple. Another example that I want to present to you is our B2b Fintech Fund. This has been in partnership with Volksbank. For those of you who don't know, Volksbank is actually right now the 4th largest financial group here in Germany. And the idea with this fund is to invest in fintech, proptech, or anyway solutions companies that can enrich the way small and medium enterprises work. And this is also a 100 million euro fund. We've been raising, we have an healthy LP base coming from the network of the banks here in Germany. And we've been already deploying it several times with quite a few investments already. I want to go a bit further and then conclude with a couple of companies that might be interested to hear about. One is Trade Plus. Trade Plus is one of our fintech investments based in Switzerland, founded in 2016. The idea is really to be a mid-ticket lender for SMEs as an alternative to factoring or to banks. Surprisingly, the first market after Switzerland was not Germany, it was Australia. So the company went off to Australia for very interesting reason. It's growing quite well from there. And from there now they're trying to expand across the APAC region. We'd love to hear your stories about that, whether this is something needed in Southeast Asia. And last but not least, one of our probably most successful portfolio companies, Planradar, who has recently received an investment from Insight Ventures. Funny story, the partners of Insight went to Austria, where the company is based, to meet the company. After 3 days, the term sheet was already there and signed. So that's always what you want to hear. The company is growing extremely well. As you can see on the slide, 8,000 customers, 45 countries being present, and really growing at scale. What they do, they are providing a software solution to harmonize and provide a communication and managing tool in construction projects. Obviously, the audience probably knows more than I do on this. This is a wide market in Southeast Asia. They already have existing clients in Indonesia, Philippines, Singapore, and Thailand, and they are actively expanding there. I will conclude now, and definitely, we're more than happy to take more questions.
All right. Thank you very much, Stefano. Any questions from our Asian side?
Yeah, maybe I can kick things off here. So I'm curious to learn more about the corporate VC fund that you are managing. So can you share a little bit on the structure and how do you structure the funds between yourself and between the corporates where it's like a single LP fund, right? So can you share a little bit more? Thank you.
Absolutely, yes. So, for example, these two funds, these are funds where we are co-GPs together, in this case, SPI. So we both are GPs, we both have the same duties and rights as the usual fund. With the corporate venture capital funds, we have a model that we call VC as a service. What that means is that this is a single LP fund. We make sure that the final decision making on the actual investment is done by them. We take care of the entire investment process in between. Sourcing, due diligence, negotiation, portfolio management. This is something that we do on behalf of the corporate. We'll be doing this, for example, this is our fund 2 on fintech. First fund with Volksbank was a corporate, was a VC as a service fund for them. We've been doing this, we've been working with Porsche, Daimler, AXA, Kone, and quite a few really big names in Europe. Maybe another example that I can mention, Deutsche Bahn, the transport, the mobility company, right? This huge public company here in Germany. A couple of years ago, well, now probably 4 years ago, actually, time goes fast. We actually funded together Deutsche Bahn Digital Ventures, a 200 million euro fund on the future of mobility, and we've been managing that for the first year and a half, and then we gave it to them. So this is a bit how we work on that side. As for why corporate capital is there, despite the up and downs of economic activity, and it can be strategically extremely useful for founders, so we wanted to activate it.
Mark, Mew, any questions from your side?
No, I'm good. I think you mentioned one company that you mentioned is in the prop tech space that expanded into Southeast Asia. It seems quite interesting. So are they more in this, they're a SaaS player from what I saw on the slide, is that right?
I think the volume was a bit low. You're talking, sorry, you wanted to know more about Planradar, right? That was the company in the construction tech.
Yeah, I think so, in the prop tech space. So are they mainly in the Indonesian market or Philippines market?
Are they in Indonesia and Philippines already, you mentioned?
Yes, they are. Yes, they are. So they are an Austrian company, already quite present quite globally. And they're now planning to ramp up. Opportunistically, they went to, thanks to some inbound opportunities, they went to Indonesia, Philippines, Singapore, and Thailand. This has been opportunistic, but now they're planning really to go big there because they see quite an opportunity in the construction sector. Because again, building things and managing all the actors around it, it takes a lot of time. It's actually quite complicated and not digitalized. And then bring it that, and especially with the last new funding round from Insight Ventures, they're really going big in Southeast Asia.
And the target customers are mainly developers, or are they corporates?
Customers are of all kinds of segments. It can be, so this is a SaaS solution. You can just sign up and use it. And in terms of ranges, it goes from quite large construction companies to small and medium enterprise sales. But obviously, there's more. The SMEs go more of with performance marketing and all, but the actual B2B sales of the company, where they need to contact the conglomerate as a clear, sales team that goes after them. And you can see probably in this slide if it's shown some of the logos of the clients that they have, but I can share that later otherwise.
Okay, Thanks for that.
Yeah, I just got one quick question. Like, I noticed that you're also investing in some fintech companies. Just wondering, for those companies to get into some like emerging markets, just like Asia, how could you mitigate or manage their regulatory problem? Because like getting a local license or like getting through the regulation is a key problem for those fintech companies. Are you mostly
Right.
leverage their co-GPs network in the local country?
How do you bring the fintech companies in your
Yeah.
portfolio to Asia or help them with internationalization because regulatory is more complicated
Absolutely.
there?
Absolutely. There is lots of there is lots of research to be done. So definitely two ways. One is in the last couple of years we built relationships, LP relationships as well as corporate relationships, especially in Korea and Japan. And we wanted to kind of understand that how it works with the regulatory there for fintech as well as other sector. I mentioned industrial tech as one of those. So that's one thing that we do. We connected with the right partners thanks to the connections they already have there. And second, obviously, we help them by through our own services. So for example, again, we have a data science team that we heavily use in identifying investment making as well as in the portfolio management process to identify market opportunities, right? So with that, those are really the two things in our recipe that help us bring these companies, such as in fintech and more, into other markets.
Perfect.
Wonderful. This was fun.
All right. Thank you very much, Stefano.
Thank you.
All right. Now we have our last fund. I would like to welcome Christoph from Atlantic Labs over here. You have the stage.
So maybe I start with a bit of background. So I am originally from Switzerland. I came to Berlin 20 years ago to build companies myself. One company you may know called Here.com, which today belongs to the German car industry. So it belongs to a consortium of Daimler, BMW, Audi, Intel, and Bosch. Following that, I started investing myself and build generalistic tech fund. 4 years ago, I realized that there may be an opportunity around the space of food and sustainability, and I created a vehicle that focuses on early stage investment in this space. The overall challenge has to do with food security. You know, if you consider, for instance, meat production, now that the rest of the world is starting to eat as much meat as the US, you know, we realize that we can't go on like this. You know, if all the cattle were a country today they already pollute more than the USA. So it needs new solution, and we believe that entrepreneur will provide some of the solution for these generational challenges. The same is true when you look at agriculture. You know, agriculture over the last 50 years has been over-industrialized. You have dysfunctionalities, such as, for instance, 4/5 of the antibiotics in the world are given to animals rather to humans. And clearly, there are some issues that needs to be solved. We think food and health. You know, clearly, food is the biggest component when it comes to human health, and typically these two areas has not been intertwined. And we see today a lot of startups that are being created at the confluence of food and human health. And last but not least, climate. You know, when we speak about climate, most people think airline industry. As it happens, the airline industry only contributes with 2% of CO2 emission, whereas the food industry, which is the largest industry in the world, amounts for more than 1/4 of all the CO2 emission. So when we think about food, I mean, we're not talking about the next lemonade. We are very much focused on backing either very IP-centric companies that start with a strong science, or starting with business model that we understand, such as procurement or marketplace. And we take a very holistic view of the food industry, meaning it starts with earth and ends with earth. So it's new form of agriculture, urban farming, fish farming, new type of protein, new ways of distributing food to the consumer, new consumer behavior, but also new discoveries, such for instance the impact on microbiome on the human, all the way down to waste, when you consider that 30% of all the food produced today is being wasted. So this will be our fourth fund. So we had a successful early stage fund as generalist funds. In the last fund, we have a 3.6x TVPI, and we are building upon the same platform with the same team that has been investing in this space for the last 4 years, an 80 million fund to invest in food tech across Europe at seed stage. We have a clear-cut food, non-food. The only thing that we are sharing is a professional fund management as well as HR capabilities. So a lot of what we do has a very positive impact on the world, but we have also proven in the last few years that we can generate return in this space. So we have invested around 8 million, we have returned 4, and we have a net asset value of 53 million for a portfolio of about 20 companies. In terms of positioning, I believe Europe is a blank slate when it comes to food innovation, and we have the opportunity to be the #1 platform in this emerging space. One of the key opportunities that we see is actually taking IP and science and turning this into company. Europe always had a lot of IP, a lot of science. There's no reason why the next impossible food will not come out of Europe. What it takes is a support system, and that's where we see our role. It helps that there's a lot of M&A activity in this space. So we want to build companies that will have a global impact and become very large by themselves. But there's a lot of companies that will be picked up by large corporates before that. So a few highlights of the existing portfolio. This company, Infarm, indoor farming, you will see them soon in Japan. They have managed a deal with Japan Rail. They have raised 170 million. We were the seed investor at the seed round. This company, as well interesting, is focusing on producing mineral water at home. So it's like a 3D printer for mineral water. When we did a B round this year, we had term sheet for all the large water companies that have realized that they have an issue with plastic bottles, and we did a 20 million round led by Danone. Legendary, this is the whole space of synthetic biology. So this is the similar process that is being done in pharma to produce insulin, for instance, that is being applied in this case to produce a lab-grown cheese. The seed round was led by Merck, and the A round by Saka and Jeremy Kohler from London and San Francisco. This is a very interesting company that is actually already negotiating with partners both in Taiwan and in Korea. They are producing a perfect protein using food waste and mycelium, the roots of the mushrooms. We just raised 10 million during COVID, and I believe this has a huge potential. So we have warehoused a few deals already for the fund, going very quickly. This one focuses on permaculture and carbon farming. It's a bit similar to what you see Indigo in the US that just raised 400 million. We have one early stage company that is focusing on diabetes. We have a procurement company that is a procurement for corner shops. We invested, they were doing 15 million GMV. 6 months later, they're doing 50 million GMV. And last but not least, a procurement company for farmers, similar to Farmer Business Network in the US, as well as a company that is a so-called dark store, similar to maybe Miss Fresh, I believe, in China, delivering groceries to the consumer within 10 minutes using a network of dark warehouse. It grew in the last 2 months from 0 to 3 million revenue. So we believe that we have a very good start for the fund. We hope to close around the first closing, around 50, 60 million by the end of this year. Our LPs are either fund of funds, looking for returns, family office, looking for returns and impact. We actually have some commitment from Hong Kong as well as from Europe, and as well large food corporates that will look for inside deal sharing, and we're very much in a position and have a track record doing that. So this is a fascinating opportunity. I believe that entrepreneurship can help us tackle the challenge of our time. This is something we want to do for the next 20, 30 years, working on food security and human health. I believe we're the leading platform in Europe, and we're also convinced that we can produce a fund that does 5x and overperforms the market. Fund terms, 2%, 20%, with a lower carry when it comes to underperformance and a higher carry when it comes to overperformance. So with this, happy to answer questions.
All right, thank you very much, Christoph. Always very interesting. Is this one of your companies that you support?
It's not. It's very healthy.
All right. Okay. Any questions from our Asian side?
Right. Hi, Lak here. So thank you so much. And I always like food fun, so it's always refreshing to hear. So maybe just a quick questions on the portfolio companies that you have, right? So I understand that the we are looking at it from maybe the chemicals or ingredient side, right? Because from the perspective of the corporate VC that I'm in here. So when we are looking at the startup under your portfolios where it requires some production facility, productions, or even like a process to produce something, right? How do you facilitate the partnership between the startup under your portfolios and the corporates in maybe other areas like even Asia to actually make the deals happen or even the partnership happens? Because it's for us, we always find it a struggle in order to bring something that is not more like a technology or service outside of the whole market of the startup in this area.
So to take a clear example, so this company Mush Labs. So really what Mush Lab will do, it will build a protein factory next to every brewery. So what we have done in the past round, we have let the biggest brewer in Germany, a group called Bitburger, invest in the company, and they're helping with their infrastructure. And what we have done in the last round, we actually had both a fund based in Singapore and a family office based in Hong Kong participate in the round. And these will also be LPs in the new vehicle. But this is something that we have helped facilitate very actively and purposefully, and we think this is part of helping the startup as well as hopefully generating additional return for our LPs.
Right, just one quick question from my end. Like, what is the co-investment mechanism for this fund? Because I believe most of the LP, including the family office based from Hong Kong, like when they
I'm sorry, I'm afraid I haven't answered. Could you repeat the question? So I would say the co-investing mechanism is very much customized to the LP. So what we don't have is a particular pro rata right for one particular LP, but what we have is very much a platform. For instance, we have organized Exploration Day for one of our Asian partners, which is this group based in Hong Kong, where they came with a whole family. We showed them 10 startups. They ended up investing in 3. So we do that very actively and at different stages, because different LPs want to invest at different stages. So we have actually facilitated, I would say, 15 direct investment from our LPs.
Mark, any last question?
No, I'm good. I think it's interesting what you guys are investing in. I'm especially hot in space. So yeah, I'll probably ask Anchor to connect us after this call.
Super, excellent.
All right.
Well,
thank you very much, Christoph.
Happy to share more. Looking forward. Thank you.
All right. So I wasn't kidding when I said that we have the best of funds here in Berlin. Starting off with an operational VC model mixed in with some private equity co-investing to a VC as a service model with a lot of partnerships all over the world. And finally here with Atlantic Labs with their studio model in the future of food and health and nutrition. So I hope that our audience from all over the world have a better idea of what we do here at AsiaBerlin. It's really about connecting the dots, connecting Europe to Asia, using Berlin as the gateway, obviously. And we think there are a lot of opportunities. We've talked about a lot of case studies already of companies moving to Asia, Asian investors investing here in Berlin. And there are a lot of opportunities. I mean, this is the first time we're doing this hybrid version. But I'm hoping that for the succeeding years that you can all join us live here on the ground in Berlin. I want to thank our family offices in Singapore and New York and Luck. Thank you as well from Bangkok. Really appreciate your insights. Thank you, everyone.